to show you both the gold and the US dollar. And so, as you probably know by now, I've always emphasized the negative correlation, nearly perfect negative correlation between gold and the US dollar. So, but that doesn't apply to all the US dollar currency pairs. But on average, it's usually the typical US dollar pairs, besides, say, the US dollar rand. So, anyways, so first of all, as always, before trade, you start with ranges. Then there's sharp, right? And that's called the flagpole. You can't predict that price is going to go up or down. While it's in consolidation, you can't predict whether price is going to go up or down. And it's dangerous to be trading within a range. Anyone who tells you, like, just enter as you're breaking out, then put your stop loss down and be a breakdown trader, you will lose a lot of money. Don't try it. Don't trade in a range. Wait for price to break out. And then once you know where price is broken out, a bullish pennant is a continuation pattern, meaning price has already moved in one direction and it's now in a second consolidation, and we can predict based on its past movement that it's going to do the exact same thing. So, for example, we've seen an uptrend push, price is consolidated, and we can predict that we're going to see a second price push again. I'll repeat. We see a consolidation first, then we see an uptrend move. Price consolidates. That's a continuation pattern. So we expect that the previous trend is going to continue, right? This is the first trend, right? This is the second trend. So we expect that price is going to continue in that trend. Having gone to your strategy, now you go to the charts. And so it was gold. So let me just share the screen. Right. So before we zoom in, essentially here is where I saw the bullish pennant. There we go. All right. So this was around Wednesday. This was around Wednesday, Thursday. So I got in here. Right there where I've put the arrow. So you can, let's break it down now that we're on the live chart. You can see that we've been in an uptrend since the 17th of July. So price pushed up, price pushed up, price pushed up. You could not have predicted the price was going to push up because it was in this consolidation. It's fine. So if I zoom in, and then here was the entry, right? This is the 8 moving average. The 1 hour, the 8 moving average on the 1 hour chart. That's when I entered. I've talked about the 8 moving average strategy before. Shouldn't be a surprise. That's how I enter. So, but what I had made profit measure the pole. You measure this first trend, measure it, and that's fine, right? But it's just what's going to happen. And so the price was going good. Came down to here. I've talked about moving your stop losses before, how you wait for a pullback and a push up, right? And then there was a pullback, moved my stop loss up here, pull down, push up, moved my then taken out for break even, which is fine. It didn't happen as planned. Like, I mean, it was still a good trade. It just didn't move as high as I expected, because usually with a bullish pennant, we expect to see that continuously keeps moving up. I was looking at least 2,300 as a target. So, well, I was looking at, everyone was saying sort of 2,100, which is where we ended up being. We ended up around, yeah, we ended up around about 2080, but everyone was sort of like eyeing that 2100 area because gold moves in round numbers. But I was seeing like 2300. But it's fine, as long as you keep moving your stop loss up, you end up still in profit. So it's not anything to worry about. Sometimes patterns don't work out as perfect, but it's still an excellent trade. So that's a non-farm payroll, how to trade gold on the non-farm payroll. Now, I do think that this is a mere pullback on gold, and that gold will continue, it will go back up. I think it was just a necessary consolidation. Price was way over pulled up from from 1,100 all the way to 2,080 prices. So that was gold on the non-farm payroll, guys. I hope that helped.